Pursuant to the provisions of the Companies Act 2013, the rules framed thereunder, and the SEBI LODR regulations 2015, the company had extended the remote e-voting facility to the members of the company in respect of the resolutions to be passed at this meeting. The remote e-voting commenced at 9 a.m. on Sunday, the 17th August 2025, and ended at 5 p.m. on Tuesday, 19th August 2025. Facility for e-voting is being made available during this meeting for members who have not cast their vote prior to the meeting. The resolutions proposed to be passed, along with the detailed explanatory statements explaining the reasons and implications, are contained in the notice to the AGM, which has already been circulated. The resolutions to be proposed to be passed are as under. Under ordinary business, resolution number 1, adoption of audited annual financial statements. As I am interested in agenda item number 2, I request Mr. Vijay Raghunath, Independent Director, to occupy the chair and read the summary of resolution number 2.
Thank you, Mr. Ashwin. Item number 2 is regarding reappointment of Mr. Ashwin Chandran as Director. He has resigned by rotation and is eligible for reappointment and offers himself for reappointment. Thank you, Mr.
Thank you, Mr. Vijay. Item number 3, resolution number 3, to declare a dividend. Under special business, I am again an interested party in resolutions number 4 to 6. I once again request Mr. Vijay Raghunath, Independent Director, to occupy the chair.
Thank you, Mr. Ashwin. Item number 4 is appointment of Mr. Ashwin Chandran as Chairman and Managing Director. Subject number 5 is appointment of Mr. Prashant Chandran as Vice Chairman and Managing Director. And, item number 6 is appointment of Mr. Sarat Chandran as mentor of the company. Thank you. Back to you.
Thank you,
Mr. Ashwin.
Thank you, Mr. Vijay. Resolution number 7, reappointment of Mr. T. Kumar as Executive Director. Number 8, appointment of Mr. Ravi Kumar Aburu as Director, Technical Textiles. Number 9, appointment of Secretarial Auditor. And resolution number 10, ratification of remuneration payable to the cost auditor. These are all the resolutions proposed to be passed at this meeting. Moving on, there are 8 shareholders who have registered as speakers for this 63rd Annual General Meeting. Of these, 4 have already sent in their questions in writing. I now request the moderator to invite the other speakers to raise their questions, and I request the speakers to limit their questions to a time span of 3 minutes. Thank you.
Thank you, sir. We request the speaker shareholders to raise their questions apart from the questions which have already been sent to the company. The first speaker is Prabhojit Singh Shahani. So you can ask your question.
Hello. Good afternoon. Thank you for allowing me. Well, hello, can you hear me? Hello. Can you hear me?
Yes, I can hear you, Mr. Prabjot, although you're not very clear.
Yeah. Can you hear me now? Better?
It's a bit better. Thank you.
Yeah. Well, thank you for allowing me to speak at your AGM. Well, I'm a very old stakeholder. And I just want to know a few things. One, what exactly are we doing in that technical textile business which we have started very recently? And what kind of sales are there to United States through that technical textile story? Because it is the most profitable venture you people have started. Second is that what kind of hit we can have with this tariff story which is going on. Second, third is what kind of dividend policy are we following? We are making good money now, and I believe that we gave a bonus, a very meager bonus in 2013, I believe. And what exactly are we doing and to reward the shareholders who have been with you for a long time? And lastly, what kind of feasibility are we getting to this solar panel installment done by you in your factory? What kind of savings we are doing in that? And are we planning to really do more into that, or it's not? Lastly, my only humble submission is that you were doing a con call or you were doing some PPT arrangement which you were giving earlier, then last financial year. Now you're suddenly stopped. Why is that? Please look into it. If it's possible, kindly continue. It gives a good repo to our company. So please look into it that just corporate, some small presentation is available because we are a small cap company. Then there is a better one-on-one happening when there is a con call or some PPT going on. Thank you. Thank you very much. So kind of you.
Thank you, Mr. Prabjot. Mr. Dhanlakshmi, I request that you ask all speakers to address their questions to us and we can then answer them because I'm sure there'll be common questions. So
Yes.
we can ask all of them to address and then we can answer them.
Okay, sir. The next speaker is Ayush Agarwal. He has not joined the meeting, sir. The third speaker is Aditya Agarwal. Aditya Agarwal has also not joined the meeting. The fourth speaker is Danvil K. Desai. Mr. Desai, you can ask your question. Mr. Desai, you can ask your question, sir.
Yeah, hi, good afternoon. Am I audible?
Yeah, you're audible, sir.
Okay. So I've sent a list of questions to you already, of course, a bit late from my side. So not sure if you guys had enough time to kind of go through that. So would you want me to repeat the questions or highlight some of the major ones?
Mr. Desai, we have your questions that you've sent in. So there won't be any need to repeat them.
Okay.
If you have anything to add, you could please do so. Otherwise, like I said, we have your questions in hand.
Yeah, the only request, sir, is that, if there's a lot of granular questions here, and this is the only opportunity we get to understand more about the business. So as much as detail that you can share on this, that would be very helpful. That's the only humble submission from our side.
Thank you. We will try to do
Thank
our
you.
best.
Thank you.
The next speaker is Rogan Patel.
Hello, am I audible, sir?
You're audible, sir. You can ask your question.
Yeah. Yes, yeah. Thanks for this opportunity, sir. I already sent my list of questions. So just to save time, I won't be repeating them. And I hope that you go through it and answer them briefly. Hello.
Yes, Mr. Rohan, we have your questions. We will answer them.
The sixth speaker is Ankit Gupta.
Am I audible?
Yeah, you are audible, sir.
Yeah, thanks for the opportunity. Sir, I've already sent my list of questions. I just have two questions to add in that. So, sir, firstly, if we can you talk about how much was our tariff in the US market before this the reciprocal tariff that has been imposed for importing the Russian oil. So if you can talk about that. And second will be yesterday there has been some announcement by the government about the custom duty exemption. You know, yeah. So if you yesterday if we import cotton, so will it change the product tariff? So if you can talk about that, the impact of the custom duty exemption announced by the government of India yesterday on import of cotton. So how is that expected to impact our margins, and how does it impact our business profile? And so thirdly, two requests from my end. Sir, since this is the only opportunity we get to interact with you, so once you are done answering questions for all the participants, do give all the shareholders some one more chance to ask any counter questions. Since this is the only time we get to interact with you, if you have some counter questions on our question send, it will be great if we get a chance. And secondly, sir, in our we do release our investor presentation. For this quarter, we haven't released, but in our investor presentation, if you can at least give us the breakup of yarn and technical textile revenues and the EBITDA margins. So, that were the two requests from my end. If you can give us an opportunity for counter questions, and, in our presentation, do give breakup of revenue and EBITDA margins of both the segments.
So the seventh speaker is Karthik, but he has not joined the meeting. And the last speaker is Ashit Desai. He has also not joined the meeting. So we can proceed with the proceedings.
Thank you. Thank you, Mrs. Dhanlakshmi. Thank you to our shareholders for their time. Since we've had questions come in from 5 shareholders who've put down their questions in writing, we have grouped, since there are a lot of common questions, we have grouped them into certain buckets. So let me just go through them and answer your questions to the best that we can. The first is with regards to capacity utilization. There were questions about the capacity utilization of both divisions, the spinning and the technical textiles. As far as spinning division is concerned, FY25 capacity utilization was 94.5%, and we are currently trending at 97%. And for this financial year, we expect our capacity utilization to be around 97%. As far as our technical textiles division is concerned, these are made to order products. They're not comparable in terms of utilization figures, capacity utilization figures to the spinning division. We have, during the last year and a half, operated at optimum capacity. That is one of the reasons that we decided to go in for our second line of hydro entanglement process, which is the spun lace fabric line. And that line was commissioned in February of 2025 after a bit of a delay. So we expect the capacity utilization ramp up of that line to take some time. Customer acquisition is a more arduous process in this business compared to spinning, and we expect the ramp up to take up some more time. The next question was with regard to EBITDA margins. So spinning, over the last few years, our margins have been between 5 and 7%, if you leave out the best year and the worst year. With the stoppage of our unit at Hindupur, which was a drag on our profitability, we expect margins to go up to between 8 to 10% going forward. There was a couple of questions about the land and building of the Hindupur unit. As per the accounting standards, we have had to classify this as land or assets held for investment. So that is what we have done. So that 33 crore figure in the books reflects that land holding. There are no immediate plans for divestment of that land. We still have machinery there which we are in the process of moving to our other units. So it will be December or January before all the machines are moved out of there. The valuation somebody had asked. So the valuation, what is reflected in the books is a fairly accurate reflection of the value. We have no immediate plans to divest, but we will keep all options open and see what is the best way forward for the company with regard to that property. Technical textile division, a lot of questions we have had about our marketing. Obviously, any customer-specific information, any market-specific information is business sensitive, and we would not like to go into those details. These include questions about pricing, strategy, contracts, etc. What I can say is that the gentleman who spoke in the beginning asked as well what kind of products we are doing. So we are basically doing cotton products for the cosmetic and hygiene segments. With the current infrastructure that we have in place, we are targeting a top line of around 460 crores. But like I mentioned, the ramp up to this will be slow, and it will be the end of FY27 before we reach these targeted numbers. As far as new products are concerned, there were a couple of questions about that. At the moment, the focus is on diversifying our market for existing products. So we are not focusing on any new product development at the moment, apart from a small capacity of cotton buds, which I think we had mentioned last year. So that is in progress. We are yet to install and commission those machines, but we expect to do so during the course of this financial year. As far as our capex plans for FY26, there were a couple of questions. As far as spinning is concerned, we do our regular modernization capex of 10 to 15 crores per year. We are doing that this year as well. Apart from this, we are adding 8,400 spindles in our Kanjikode unit. Both these put together will incur a capital outlay of around 30 crores. As far as our technical textiles division, balancing equipment for finished products that we had already planned for and ordered in the last financial year. So those will be commissioned this year, and the buds machines, as I mentioned earlier. So we expect a capital outlay of around 50 crores in the technical textile division in FY25-26. As far as tariffs are concerned, obviously, we had a lot of questions regarding that. Allied to that is our market segmentation. Currently, over 50% of our products go to the US. Our aim is to have 50% going to the US and 50% going to the rest of the world. We have a presence in more than 20 other countries now, and our aim, like I said, is to have half our production going to countries other than the US. Members must understand that the market for these products is the developed world as of today. Markets such as India are still very nascent for these products. We are working hard from a marketing perspective to diversify and to enter new markets and geographies, but that will take some time. Our competition for these products is mainly from Europe and America. With regard to tariffs, we were selling to the US at a 3.6% duty. That was before all of this tariff drama started. Post April, we were hit with a 10% tariff, which was additional to that existing 3.6%. So all goods that were shipped until August were shipped under a 10% tariff. And now again from August 8th, there has been a 25% tariff. So this 25 is replacing the 10. So goods that are going out from August 8th are going out under a 25% tariff. The threat is of an additional 25%, which we have until August 28th. One hopes that this is only a threat and does not translate into reality. There is a lot of uncertainty. The current belief and expectation is that we will end up at somewhere around 25% or below that. We are also in constant touch with our US customers. They are also, quite uncertain as to how all this is going to pan out. We don't expect any immediate impact next 3 to 6 months, but going forward, definitely there will be shifts, there will be impacts, there could be a margin squeeze as well. We have to wait and see. We are working out ways and means to mitigate the longer term impact of these tariffs wherever they end up or whatever rates that we end up with. But it is something of concern, but not something that we have control over at the immediate term. So we are working on ways and means, like I said, to mitigate this for the longer term. With regard to financials, there were a few questions. One question was with regard to our Hindupur unit. So we were achieving 120 to 140 crore top line there. So will our spinning top line come down to that extent? In the immediate couple of quarters, yes. But we will be partially making up this revenue by moving assets to other units and increasing our production, and the small expansion that I mentioned of 8,400 spindles in our Kanjikode unit. So these will help us to partially make up the revenue from our Hindupur unit, but not wholly. Going forward, just to look back, last year we had as a company a revenue split of around 75% of our revenues coming from the spinning division and 25 coming from our technical textile division. In the current year, we expect 65% of our revenues to come from spinning and 35% from technical textiles. And going forward, like I mentioned, when we ramp up our production and our marketing in our technical textile division, this 35% will further increase. There was a question about the asset turns in the technical textile division. So for our investment so far, we've been, for every rupee invested, we've been earning a turnover of around 1.5 rupees. So about 1.5 is the asset turns there with regard to fixed assets to revenue. With regard to our debt, 330 crores was our total debt as at the year ending. There was a question as to how this debt has been assigned to the two divisions. The long-term debt is clearly allocable, and 90 crores of that, roughly 90 crores of the total 140 crores of long-term debt pertains to the technical textile division, and 50 crores pertains to the spinning division. As far as the working capital debt is concerned, it's not directly allocable, but majority of it is for the spinning division. The technical textiles business is relatively less working capital intensive compared to spinning. There's not much raw material inventory, and they are made to order products like I mentioned earlier. So it is a relatively lower capital intensive business. With regard to EBITDA levels in the technical textiles division, we have had a couple of shareholders ask us about 30%, 27%, etc. These are not, figures that are sustainable. I'm not sure about that 33%, where that number is from. But like we mentioned last year, 18 to 22% is the sustainable EBITDA level for this division. Quarter to quarter, if certain factors, parameters work in our favor, maybe we've achieved slightly better than that, but this is the sustainable EBITDA level that we expect to earn in this division. With regard to solar, there was a question from a gentleman. So we've followed, depending on the location, depending on the state that we're in, we followed different strategies. We do have 10 megawatts of our own solar plants that are in-house plants. And we also have around 13 megawatts of solar purchased through group captive schemes. So depending on the location, depending on the state, we follow different strategies. And going forward, we don't have too much room to further increase our consumption of solar energy, but wherever there is, we will look at the opportunities going ahead. As far as the cotton duty exemption, so this is something which is, very short window that they've given for this duty exemption. It's only until September 30th. And we understand it's cotton that comes into the country before September 30th. So given the lead time and the logistics, it is very difficult for somebody to contract to purchase cotton today and hope to get it inside in Indian waters by the end of September. So while this has been done as a benefit to the industry, it seems to be a little too late. We were hoping that this would be announced in March and the effect be given from April to September, but the announcement was delayed, and we don't expect this immediate relaxation to be of any significant benefit to the spinning industry. A couple of questions about the forecast for the spinning industry going forward. Demand continues to be weak, both in the domestic and export markets. We were hoping that with the tariffs, there will be some advantage to India, but at the moment, it doesn't look that way. It only looks like we'll be at a disadvantage. So it's too early to talk about whether how much this will affect the spinning business and whether this will benefit Bangladesh, Sri Lanka, etc. So, like I said, with the technical textile division for the spinning business as well, we have to wait and see where the tariffs end up at before we know the full consequences and implications. As far as dividend is concerned, members will be aware that we had a tough few financial years, right from 2012 to 2000 for the next 7-8 years or so. So we did not have a dividend policy in those years because the company was not in a position to pay out dividends in most of those years. We have just come back into a dividend paying mode over the last 2-3 years. We've had cash requirements to fund our expansions and our modernization over the last few years. So we have been relatively conservative in our dividend payout, and we will look at the fiscal portion of the company going forward and then lay out a dividend policy going forward. We don't have any fixed policy yet. As far as investor presentations are concerned, we did put out information for a few quarters, but we realized that some of them were business sensitive, some of them were not information that we thought should be out in the public domain. Therefore, that practice was not continued. We do appreciate that shareholders would like to interact with us. We will look into doing some sort of an investor call or some sort of a Zoom or a video conference meeting going forward. We will keep that in mind, and we will look at how we can improve our outreach to our shareholders. I think I've answered most of the questions that our shareholders have raised. Like I said, there are some market-specific, customer-specific questions that we cannot go into for obvious reasons. Also, forward-looking information in terms of specific numbers is not something we do. So apart from that, we've tried to answer your questions to the best of our ability. If there's anything further, if we've missed out anything or anything specific, we'd be happy to take a couple of questions if there are. Mrs. Dhanlakshmi, anybody else? Did anybody else want to ask a question?
So 1 minute, so I'll check, sir. So no, all speakers have asked their questions, sir.
Okay. No further requests from anybody?
No, sir.
Okay. Mr. Vignesh, practicing company secretary, has been appointed as a scrutinizer for the process of remote e-voting held prior and e-voting held during the AGM. I request Mr. Vignesh for an orderly conduct of voting. He will submit the report after conclusion of voting on all the resolutions. The e-voting facility provided by MUFG in time will remain open for the next 15 minutes to enable shareholders who are present at the meeting and had not cast their votes through remote e-voting to cast their votes electronically. The voting results will be declared within 48 hours and will be posted on the company's website and the NSE's website. I'd like to thank all our shareholders, directors, auditors, the scrutinizer, registrar, and all others who have joined the annual general meeting through video conferencing today. With this, the 63rd annual general meeting stands closed. Thank you.